pleased to have with us today Keith Maib. Thank you so much for being here. Senior Managing Director of Mackinac Partners. Thanks for joining us.
Thank you.
Let's give a little overview just to start off about your firm. What can you tell us?
Sure, we're a traditional boutique financial advisory firm. We focus primarily on company representations and specifically interim management. Most of our opportunities come from closely held private equity relationships. So we're kind of private equity's choice for interim management and distressed acquisition, and serve either as formal or informal operating partners to a number of private equity firms.
If you could share with us your firm's involvement in the ADV venture.
Yeah, we were brought in at the request of the independent directors, initially as financial advisors, and then subsequently as I was named Chief Restructuring Officer, to effectively, strategize, lead, then implement the proposed, in effect, sales strategy for monetization of value for ag feed.
So this is actually a tale of two 363s.
Absolutely.
Talk to us about that a little bit.
Yeah, so there was no liquidity. The value ultimately to equity holders was all captured in China, but there was no liquidity that gave us the ability to realize that value. So we first had to embark on a sale process for the USA assets, which we did the traditional 363 out-of-court marketing, followed by a bankruptcy filing and a motion for approval of a sale. A very robust sort of post-marketing effort that resulted in an upset for the stalking horse and a 25% premium to value over the stalking horse, which then, most importantly, provided us the runway and the liquidity to pursue the sale of the China operations. The China operations were very complicated because there was a history of fraud and lack of regulatory compliance and social tax compliance and all of those sorts of things. So we were looking for a relatively unique buyer in China. The buyer had to be probably a Chinese operator that could deal with those social tax compliance issues in what I call a uniquely Chinese way. We needed to transact outside of China because we couldn't sell assets inside of China because repatriation of the cash as part of that transaction would have been very difficult. So we're looking for a Chinese buyer to buy Chinese assets in a stock sale with lots of fraud and lots of bad accounting irregularities, and do that in a context of a stalking horse competitive bid process within the U.S. bankruptcy courts. It's a very complicated transaction.
Talk about a lot of hurdles and a lot of uncharted territory as well.
Yeah, and through the great efforts of a lot of folks, we were successful in getting it done. To our knowledge, it's the first and to date ever. I hope it's not the last. I hope there are more to come, but we believe it's the first and only acquisition to date by a Chinese company of the Chinese operations of a U.S. Chapter 11 debtor. So we're pretty proud of that. And
the industry really just stood up and took notice of this because there were so many firsts involved in this transaction. Right. How do you think this will impact the future of M&A dealings?
I think there's a lot to be learned out of this transaction in terms of how to execute the transaction. It's so different than the traditional U.S. 363 process where you're setting a hard floor and then you're asking people to compete against a hard floor. There was never a hard floor in this transaction. It was a constant renegotiation and reapproval of a transaction to get it done. So I think the knowledge of that will be part of it. I think just the fact that somebody could get one done, there's such a bias here in the U.S. of U.S. investment capital owning assets in China because of the lack of transparency, the lack of regulatory oversight, the concerns around fraud and disappearance of assets and those sort of things. The fact that a deal got done, I think will hopefully open up doors for future opportunities to do the same thing. Because there is value there.
Right, very, very impressive. So when you guys first started getting involved in this transaction, and you were laying out all the pieces and foreseeing what was going to come, there were a lot of hurdles in the beginning that you knew of. Did anything really surprise you?
Oh yeah. Yeah, the employee strikes at the end surprised me. There was a big issue around the Chinese employees and whether or not somebody was going to assume their employment and responsibility for past social obligations, effectively pensions and the like. And so we had issues of employees sort of stealing assets, not showing up for work. There's an issue of the chops, which in China the chops are basically what allow you to transact business. We couldn't deliver the chops.
The chops?
The chops are like they'd be similar in the U.S. to the corporate seal that you might stamp important.
Okay.
Well, in China you stamp everything with the chop. Because the chop is what basically certifies that, like for example, an invoice is an original and certified invoice. And so without the chops, you can't sell, you can't purchase, you can't do anything. So you have to deliver that physical chop to a buyer in order for the buyer to be able to continue to transact business. Our employees took the chops, and so we got down to the day of closing and we couldn't deliver the chops.
Who's got the chops?
Who's got the chops? So I learned a lesson about that. Next time I'll take control of the chops a little earlier.
Sounds like your company has the chops after being so successful in this kind of a deal. Keith, a pleasure to talk to you.
Thank you very much. I
so
appreciate that. Thank you.